Thank you, everyone, for joining us today. I'm Ashford Chancelor. I'm the practice manager for the North Texas region of vcfo, and we are here today to talk about the Paycheck Protection Program, otherwise known as the PPP, and you'll hear me say those initials quite a few times during this presentation. This program has already passed through several versions since it was originally approved by the House and the Senate last March. We are here to cover not only the basic and unchanged features of the loan program, but also the latest bill that was approved by the Senate last week and then signed into law on June 3rd. We've already held 6 or 7 webinars so far on the PPP with multiple organizations and several hundred people attending, and we have navigated through several versions of guidance on the PPP so far, and there will be more to come. Before we start, let me thank the Entrepreneurial Institute and their sponsors in Dallas and Houston, which opened their networks and helped us to build awareness for this webinar. Since 1976, the Entrepreneurial Institute, which is a nonprofit organization, has provided guidance to CEOs and presidents of small and medium-sized companies through an event called the President's Forum, which is an annual conference of high-powered peers backed by a powerful network of entrepreneurs and expert service providers held in cities throughout the USA. Also, let me say a few words about vcfo, which will be celebrating its 25th anniversary next year and has worked with over 4,000 clients during that time. We are a unique professional services firm offering a customized team model to assist companies with financial, recruiting, and human resources needs. We can deploy CFOs, controllers, assistant controllers, HR professionals, and recruiters to provide a highly customized approach to create an optimal and flexible solution to address your particular requirements. And so far, and even more relevant to this presentation, we've helped 49 clients to receive PPP loans totaling over $22 million. At present, we're working with our clients to position them for maximum loan forgiveness, given their circumstances. I would also like to introduce my fellow facilitators for the event. Chris Hysinger, who is a consulting CFO for our Houston office, and Jennifer Lennarz, who is a consulting CFO in vcfo's Austin office. We are really lucky to have them here today. Since the CARES Act was passed last March, they have been monitoring the legislative process, keeping us up to date on the latest developments, providing guidance, and continuously scrutinizing the SBA and Department of Treasury websites for updates, interpretations, changes to the interim final rule, and all other PPP-related areas. They will be providing expert commentary for us today, and will also be answering your questions at the conclusion of this presentation. So far, as questions arise during this webinar, please click on the Q&A icon at the bottom of the screen and send those to us. Please do not send it to us on the chat function. And as for questions that we can't get to today, just because of time limitations, we will post answers on the CFO website in the next few days. And also, this presentation is packed with a lot of important details and dates, and there is no way that you can absorb all of them in the short time we have together. So after this session, you will receive an email in the next few days with a link to this presentation. You can download it, listen to it again, and get access to the materials. Before we move forward, let me ask my colleagues to introduce themselves and talk about their experience and background.
Thanks, Ashford. My name's Chris Hysinger. I'm a consulting CFO out of our Houston office. I work with a wide range of clients across a broad sampling of industries. I've been a finance and accounting professional for over 20 years, crossing industries such as oil and gas, technology startups, and marketing and trading for commodities. I'll now ask Jennifer to introduce herself.
Thank you, Chris, and hi, everybody. Thank you for joining us today. As Ashford mentioned, I'm a consulting CFO in the Austin office. I have almost 30 years as a finance and accounting professional in Austin, as well as other areas I spent time in Big Four public accounting and then out in industry, including being CFO of multiple high-tech startups. For vcfo, I specialize in venture capital and private equity backed technology companies.
That's great. Thank you, guys. And as I said before, these guys are our subject matter experts in this area, and they're going to be jumping in on this presentation from time to time to offer their insights and guidance, as well as taking your questions and answering them at the end. So with that, let's get started. But before we begin discussing the PPP, it's important to remember that this loan program is just one small component of the largest, most comprehensive, and the most quickly implemented economic rescue in history. Let's step back for a moment, and for context on how all this transpired, let's review what happened. We are at a moment in time that economists, historians, journalists, psychologists, the medical profession, and politicians will be writing about and discussing for decades to come. The sudden and precipitous economic collapse was not caused by supply and demand imbalance or by financial deleveraging, as in previous recessions, but by an epidemic, quickly turned pandemic that caused the world's economy to shut down. This was a scenario that was resident in disaster scenario planning, but has never before been a reality until now. The Federal Reserve, using broad-based tools developed and derived from the previous financial crises, moved rapidly to inject liquidity and backstops into the system to keep it from collapse. And on this next slide, we can see this is just a very brief summary of what they did very quickly. If everybody remembers, they dropped the federal funds rate to almost zero, or zero, almost zero, very quickly. They resumed the purchase of massive amounts of Treasury and mortgage-backed security in the system to inject liquidity into the system. They also either established or strengthened 4 major credit facilities, the primary market and secondary market corporate credit facilities, which is designed to inject loans to broker-dealers to keep the capital markets functioning. They initiated the Main Street lending program, which purpose was to offer loans to large companies that were too large for the PPP program. And one of the things that's, I think, been lost in all the economic news is the Main Street lending program. Actually, for the first time in history, the Fed purchases debt from individual companies. And then lastly, they also started the Paycheck Protection Program lending facility, and that's actually the mechanism that's used to fund the PPP programs through the SBA. And then the last one on this slide, but certainly not the last thing they did, direct lending to state and municipal governments through the Municipal Liquidity Facility. And that with all those actions, very quickly, they injected themselves to keep the economy, the structures that run the economy stable. And on the legislative side, Congress also moved swiftly to enact a dizzying array of relief packages to individuals, both large and small companies, states and municipalities, hospitals, health and human services, and others too many to list. As I was researching this topic, I found a congressional website which had 27 pages directly describing the broad-based and comprehensive efforts to stabilize the economy. And that's just line by line, program after program after program after program, hitting areas that I hadn't even thought of yet. So it was very well, thoroughly thought out how to do this. And now, as a part of that, the Paycheck Protection Program, otherwise known again as the PPP, was enacted to produce a direct incentive for small businesses to keep their workers on the payroll. So let's move on to talking about that and then to review our agenda. So today we are going to discuss the rules around using PPP loans and the forgiveness program and discuss some things to keep in mind as you parse your way through all the different requirements. But first, I'd like to review at a high level the PPP program and its intent. Then we'll briefly discuss the concept of economic necessity, which is a key component to eligibility in the program. And then we'll move on to what you can and can't do or can't use the money for. And finally, we'll discuss what happens to the unforgiven amount and what documentation you will need to submit to your lender. So on this slide is the most informative to companies that have not yet received a PPP loan. And there is money still available. There is $100 billion still out there as of yesterday. And I'm sure, as all of you know, the Paycheck Protection Program was established under the CARES Act. The program is administered through banks and other financial institutions in the form of a loan. The purpose is to provide money to small businesses so that they can retain workers at a time when their businesses might not be able to justify retention. And if certain payroll dollars and headcounts are met, the loan can be entirely forgiven. And we'll cover those criteria in more detail later in the presentation. But what happens when your business receives a loan? First, open a separate bank account for the PPP funds. This is an important step for tracking use of the loan proceeds and providing a clear audit trail in case you are audited. The 8-week covered period, or now the 24-week period, begins the date the lender makes the first disbursement of the PPP loan to the borrower. Also begin working with your lender on your forgiveness process. And very important, and Jennifer and Chris will emphasize this later on in this program, continue to monitor the SBA website for updates. So let's talk about the economic necessity of the loan. This is something that's been the subject of much discussion in the media. There were several companies early on in the process that you may have read about that once their loan proceeds were received, they actually realized they did not need the loan and returned the money to the SBA. It caused some bad press for them because the first round of PPP funding ran out of money before all the companies that needed the loan received one. And so it was a situation of these companies not really understanding the economic necessity or not measuring it appropriately enough within their companies. But regardless of that situation, your company has to be able to determine an economic necessity for this loan. So how do you do that? Generally, if you can demonstrate that this pandemic has had an adverse impact on your business, whether by a reduction in revenue or the inability to send or receive orders, a disruption in the supply chain, the need to completely shut down operations in some cases for a period of time, or not receiving timely payments for your customers, you should be able to demonstrate this need. But when quantifying necessity, it is important to decide such factors and consider such factors as other sources of liquidity, the size of the loan you received, and that there has been some tangible adverse impact. On the next slide, the good news is if your loan is under $2 million, you are automatically assumed to have met this economic necessity requirement. But you still may be audited. And however, if your loan is over $2 million, you should expect an SBA audit. That's a bright line there. In general, though, it is a good idea to thoroughly document this need. You may not remember what your rationale was 2 or 3 years from now. And the documentation can be as simple as a memo to the file that you need to keep with your other documentation, or it could be a board resolution that discusses the rationale for the loan. In any event, documenting this need, as well as other aspects of the use of funds and application for forgiveness, is an important to do for your business. And so in this next section, we're going to discuss the use of the PPP proceeds. So the next slide will show us that there are very definable guidelines for what these loan proceeds should be used for. The biggest category is payroll. This includes not only base pay, but commissions, tips, vacation or sick leave, employer contributions to retirement plans, and employer contributions to group health plans. Now, caveats include that you cannot claim forgiveness for any compensation over the $100,000 annualized cap for individual employees. And you also can include sick time or leave related to the first Coronavirus Response Act. These amounts are reimbursed through your payroll taxes. You can also receive forgiveness for non-payroll expenses, specifically interest on a mortgage or real or personal property acquired prior to February 15, 2020. And this is an important date that you'll want to remember because we'll discuss it in more detail later in this presentation, February 15th, 2020, and also rent under lease agreements enforced prior to February 15th, 2020. Utilities such as water, gas, phone, internet, electricity, transportation. All those you can use PPP proceeds for. Now on the next slide, let's talk about what you can't use the money for. You can't use it to pay independent contractors or anyone else who resides outside the United States. As I noted on our previous slide, you can't be forgiven for pay to any one person that exceeds $100,000 on an annualized basis. The employer portion of federal taxes can't be forgiven. And as we mentioned before, qualified sick or medical leave for which a credit is allowed under the first Coronavirus Response Act cannot be forgiven, although it can be paid back through another mechanism. And very important is generally that prepayments of any expense or principal payments on loans can't be forgiven. So with that kind of covers the basics of what we already know, and probably one of the main reasons you joined this webinar is to find out what are the changes in the Flexibility Act that was signed into law just 5 days ago. And on this next slide, we can, the primary impact of these changes, and these changes actually significantly changed the landscape for the 4.4 million PPP borrowers, in that it gave them additional time to qualify for forgiveness, and it eases the restrictions on how much of the forgivable portion of the loan proceeds must be used for payroll costs. These changes actually came days before the original initial 8-week covered period ended for those companies that got the first round of funding. So this came right at the right moment. And so if you look at these bullet points, you can see that the first one talks about the existing borrowers have the option to extend their 8-week covered period to 24 weeks, but you can't extend it beyond December 31st, 2020.
Yeah.
New borrowers will have.
Ashford, let me just make a quick comment on that
Yeah.
one too, so everybody understands on these periods. So the current guidance is really offering 2 periods now, 8 weeks or 24 weeks. At the moment, we don't see any alternatives between those. So for example, you've used up all your proceeds, a 12-week period, can you then file for forgiveness? At the moment, we don't see that. There very well could be new legislation that adds a little bit of flexibility in here. But at the moment, what we're seeing is 2 periods, 8 or 24, which means in that 24-week period, you have to maintain fees and wages for 24 weeks.
Jennifer, you bring up a great point. One of the things that you'll see later in this presentation is that the SBA has issued 48 frequently asked questions, or interpretations of frequently asked questions. So far, since this law is only 5 days old, it has issued none. And so, Jennifer, as you pointed out, there's a lot more guidance that will come out of this. This is late breaking news. When we scheduled this webinar, it was before the PPP Act was enacted, and so we've had to put a lot of new information into it. One of the big ones, one of the big provisions on the third bullet point, it lowers the amount of forgiveness that must be spent on payroll costs from 75% to 60%. But there is now a cliff that if payroll costs are not at least 60% of the loan, or none of the loan will be forgiven.
Ironically, this is one of the places where we have conflicting guidance. So the legislation is very clear. The legislation says there's a cliff. However, on Monday, there was a joint press release between Treasury and the SBA that said there will not be a cliff, that it'll be prorated. We don't know yet how Treasury and the SBA are going to do something that's currently written in law, but we expect some sort of movement around here, even if it's going back and changing the law.
Absolutely. Thanks, Jennifer. The next point which shows that it moves the deadline to restore FTEs and wages to December 31st, 2020. And then there are two exceptions to restoring FTEs. The first exception is when a borrower cannot find qualified employees for unfilled positions. And this exception could apply when the borrower requires its labor force to have a specific skill set that's in high demand, or even more likely that it can apply to situations where the borrowers have a difficult time finding employees due to risk associated with COVID-19 or the inability to social distance. The second exception applies when the borrower cannot restore its operations to comparable levels of business activity due to social distancing, sanitation requirements, or customer safety needs.
Yeah, I mean, again, this is one of those areas that we're still going to be looking for more guidance, because we had a couple existing exceptions in there to begin with. We had the exception associated with you make an offer to an employee to come back to work, that employee turns down the offer. Well, that was an exception, but they were very clear about the documentation. You need a written offer. They recommended you get a written response from the employee. We don't know at the moment what the documentation is that's going to be required for this, but we expect some sort of documentation to be required.
Got it. And so on the next slide, changes in the more changes. And so for existing borrowers, the repayment period can be extended from 2 years to 5 years if both the lender and the borrower agree. For all new borrowers, the repayment period is 5 years. It also allows companies to get loan forgiveness to defer payroll taxes. And as Jennifer and I have said, we are expecting new guidance to be issued by the U.S. Treasury and SBA regarding these changes. There's a lot more to come.
Yeah, in fact, you know, they have come out, both the Treasury and the SBA, that they're going to have a new or a modified forgiveness application. And they have indicated that this time it'll be less than 11 pages and that they're going to try to make it easier to understand. We shall see.
On the next slide, interim final rules have been issued by the U.S. Treasury and SBA, and I encourage you all to go to the SBA website and read those. There's a lot of great guidance in there. And to the point we've been making, SBA has issued 48 PPP FAQs so far, but no frequently asked questions have been issued for the Flexibility Act since it's only 5 days old. So with that now, we can move into the loan forgiveness portion of this presentation. This is the part now where you've done all the calculations, you've claimed maximum forgiveness, and what happens now? I'm going to let Jennifer and Chris on this next slide talk about important dates.
Yeah, so the first important date is your loan disbursement date, okay? So this is the date that you first receive funds from your lender. If your PPP loan was done through multiple disbursements, the disbursement date is the date you received the first one. It is the beginning of your covered period under the 8-week or the 24-week. The one exception is if you decide an alternate covered period. Next is February 15th, 2020. February 15th, 2020 is in-service date for lease agreements, for mortgages, for utilities. You are going to have to support to your lender in the SBA that these services were in place. This is also the FTE reduction safe harbor date. One of the things I'll point out is the wording in the FTE reduction safe harbor and the salary hourly wage safe harbor is it is the pay period that contains February 15th. So be aware of that. These are important dates when it comes to those safe harbors. Next, February 15th to June 30th, 2019. These are options 1 for your FTE calculation. Option 2 for your FTE calculation is January 1st, 2020 to February 29th, 2020. Now, for any of y'all that are seasonal employers, there is an alternative reference period for seasonal employers. That reference period is any consecutive 12 weeks between May 1st, 2019 and September 15th, 2019. Next, February 15th, 2020 to April 26th, 2020. So this is a comparative period for wage reduction calculation. So again, we're starting with that February 15th date. The significance of the April 26th date is it was the CARES Act plus 30 days. So this is the period that you're going to look at to see if you are eligible for some of these safe harbors. January 1st, 2020, March 31st, 2020. This is the base period for wage reduction calculations. December 31st, 2020, this is the safe harbor date that is a new safe harbor date for both FTEs and wages. This is the date that used to be June 30 until the Flexibility Act was passed.
Thanks, Jennifer. Let's go on now to the forgiveness overview. So forgiven amounts must be incurred and or paid during the covered period following the receipt of funds. There's some limited flexibility around when the covered period ends or starts. And of course, loan proceeds must be used for allowable expenses. And the last bullet point, no more than 40% of the loan forgiveness amount may be attributable to non-payroll costs, once again, rent, mortgage interest, utilities. On the next slide, we can see that there's some additional considerations and some other things you have to be mindful of when you have received your PPP loan. You cannot receive the employee retention tax credits provided for under the CARES Act. You must follow the SBA guidance precisely on the use of these funds, and I can't stress this enough. And another one, and this is a very key point for many companies, the IRS has ruled that while the forgiven amount will not be taxable, the expenses that those funds went to pay are not deductible because the IRS does not want double dipping. And then lastly, any economic injury disaster loan, the EIDL advance that was received will be deducted from the forgiveness amount. And on the next slide, you can see, and this is another very important slide, to maximize loan forgiveness, which is what everybody wants to achieve, 3 hurdles must be met. First, during your covered period, you must pay your employees at a minimum of 75% of the rate you were paying them during the respective test period. And note this is not calculated based on total compensation, but on the relevant pay rate, such as a base salary or an hourly rate. Also, your average FTE levels during the covered period must be at least as high as the average FTE level during the relevant test period. And then finally, no more than 40% of the forgiveness amount can be used for non-payroll expenses. And Howard, there are 2 safe harbors, one for pay rates and one for FTEs. They both require that you restore FTE levels or pay rates by December 31st, 2020. And so now we get to one of the final parts. Once we position ourselves for maximum forgiveness, and then you've got the conversion to a loan. And of course, it's evident any amount not forgiven will be converted to a loan. There's a 24-month or a 5-year term from the date of disbursement. Payments are deferred for 10 months following either 10 months after the end of the covered period, if forgiveness is not sought, which probably won't happen in many cases, or 6 months after the date that funds for the forgiveness amount are remitted to the bank by the SBA. The interest rate will be 1%. And the last bullet point is even more important, that even after conversion, proceeds must still be used for approved expenses only. Now, the documentation required to be submitted for payroll, it's fairly straightforward. You've got your third-party payroll provider reports, bank statements. You've got tax forms that conform to that covered period. You've got payment receipts or account statements that can prove that. On the FTEs, it's the number of FTEs on payroll per month between February 15th, 2020 and December 31st, 2020. And the average numbers of FTEs on payroll per month between January 1st of this year and February 29th of this year are alternative periods for seasonal employees, as Jennifer referenced earlier. And then lastly, the documents for non-payroll are fairly straightforward as well. Copies of utility invoices, receipts, or canceled checks, or some type of account statement verifying payments. And another key point is that lease agreements are required to be submitted, so they can tell what's a secure lease payment, what are common area charges, and that way it gives the lender an idea into what's going to be eligible. And so now it's time for questions. One of the things that we got early on is even before this webinar began, people were already submitting questions. So now we're going to turn it over to Jennifer and to Chris to answer questions. And once again, a reminder, please put your questions in the Q&A and not into the chat function. So with that, I will turn it over to Jennifer and Chris.
Okay, Ashford, thank you very much. So I will start with one of the questions that we received earlier. And actually it was put into the Q&A also. If we choose to go from 8 weeks to 24 weeks, are we still capped at $15,385 for our employees that make $100,000 a year? So the cap is a prorated cap to not exceed $100,000 a year. So on a prorated basis, 8 weeks of $100,000 is $15,385. Over a 24-week period, it's about $46,100, okay? So it is a prorated amount dependent on your covered period. Chris?
I'll take the next emailed question. This one is a little bit trickier. It involves a company or a person that is managing a small 501c6 nonprofit with 1 employee. And the first question is that nonprofit eligible for a PPP loan? As far as we understand, in the initial legislation, 501c6s are not eligible for PPP loans. The only 2 type of nonprofit organizations that are eligible are 501c3s and I think 501c19. But unless additional changes are made, a C6 nonprofit would not be eligible. The second question was around whether or not contractors could be paid out of the PPP loan, which they cannot. And there are no other programs that we're aware of that would provide government assistance for the payment of nonprofits, with the exception of the EIDL. If you don't already have an EIDL, though, I think they're limited to agricultural concerns at this point. So that's the response to that question. Then finally, there was a question, or this is a 3-part question. They say that their Bank of America had stated on the application that they would only approve loans for companies that have no credit relationship with any other bank. I'm assuming that was companies that are not currently Bank of America customers. And is this a program-wide rule or a B of A rule? It is a B of A rule. There are banks that are taking applications from non-customers. To my knowledge, they are not restricting it to, in fact, we have a client that got a bank through a bank they weren't currently doing business with, even though they had a strong relationship with a larger bank, because the smaller bank was able to move more quickly.
Okay, thank you, Chris. So I will take one of the other questions that's come in through Q&A. The question is, are the following types of compensation included in eligible payroll costs for loan forgiveness? Personal use of a company vehicle, mileage reimbursement calculated using the IRS allowable mileage rate, cell phone reimbursement to employees who are using their personal cell phones while working remotely. So this question has a lot of pieces to it and sort of falls into a couple different areas, at least in my opinion. So the guidance has been very liberal on the interpretation of what is considered gross wages. So, you know, it is including salary or hourly rates, tips, commissions, and other things. To the degree that it is something that would show up in a tax return as gross wages, it seems that that would allow to be included. So personal use of a company vehicle, is that, if that is something that you historically include in someone's compensation, then I would expect that to be included. However, I would recommend that you have that discussion with your lender, because ultimately it's your lender that signs off on these things. Mileage reimbursement calculated using the IRS and cell phone reimbursement, those are not wage items. Those are reimbursable items. Now, you know, we don't know exactly what is going to fall under transportation at the moment. We have seen that most people think that if you're a delivery service and you have trucks and you're putting gas in those trucks, that the gas would be included. Under telephones, we haven't had clarity whether telephones include cell phones. Okay, so, you know, there are companies now that don't have a landline. All they have is cell phone service. We don't have very clear guidance. We have been hoping that there would be more guidance coming out on that. For these things that we don't have guidance, we do recommend that, you know, you create a spreadsheet of all these things. Put the vendors in there, put them into categories. We know this one, we know these are allowed because they're explicitly allowed. These ones are unknown. Quantify them, make sure you know what they are, have discussions with your lender about them, and continue to monitor the guidance coming out from the SBA and Treasury.
Great. So the next question asks, is there any requirement for specific identification funds tracing? Or if the PPP funds were committed, or should I say commingled in our general account, can we just prove up what we spent on covered expenses during the covered forgiveness period? There is no SBA or Treasury requirement that these be isolated in a separate bank account. That's our guide, that's our advice, only because it makes it much easier to track if the only expenses in the account are approved expenses. But if you have an accounting system that enables you to track that and you have all the documentation, then you can prove up the use of funds, even though they're commingled.
Okay, I have seen a couple questions via the Q&A and on email regarding FTE. So I'm going to see if I can give an answer to cover some of these things. So the question I received during email was rounded numbers when the application was done. Then through Q&A, we've had questions about how is the calculation done for forgiveness. So when you did your application, if your bank rounded numbers up or down, that really doesn't come into play when you do fill out the forgiveness application based on the current application that is out there. The current application has methodology for calculating FTEs, and it goes down, that calculation goes down to 1/10, okay? There are two methods for calculating FTEs. One method is actual hours worked divided by 40, rounded to 1/10, not to exceed 1, okay? So, and then there's a simplified method which says that anybody that works 40 or more hours is counted as 1. Anybody that works less than 40 hours is counted as 0.5. When you pick your methodology, you must use the same methodology for your reference period and your covered or alternate covered period. So you are comparing a reference period to a covered period. You're not comparing a covered period to what was put on an application. We highly recommend that people do both calculations because you will get different answers using the different calculations, especially when it comes to reductions. Okay, so, you know, take a look at both of them, pick the one that is going to generate the most forgiveness for you.
Just to follow up on the FTE question, there's also several about how you handle employees that left voluntarily or are out on leave. The way the current forgiveness application is written, you would be able to, the FTE calculations on an employee, well, you would exclude those employees from your calculation. So you need to exclude them and just document that you excluded them and the reason why. There's allowable reasons if an employee was fired for cause, if they chose not to return to work, if they chose to leave voluntarily, if they're out on leave that's subject to the Family's First Coronavirus Act, the paid medical or paid long-term leave, they would not, you would not be penalized for not having those FTEs in your calculation, and you just need to make an adjustment to get the calculation correct.
Yeah, exactly. If an employee requests a reduction in hours or requests FMLA or a leave, the company doesn't get penalized for that.
And there, I just saw another question that said, can we replace one full-time FTE with two part-time people? The answer there is yes. It's based on the total number of FTEs. It doesn't matter. You know, if you got rid of one employee and hired another employee for a completely different job, that doesn't affect your FTE calculation. Now, it may affect wages if they're making vastly different rates, but not FTE calculations.
Right. And, you know, the application for forgiveness that we've seen to date is a very detailed application. So if an employee is left and an employee and you've replaced them with somebody else, or you, a better example is you let an employee go because you downsized or furloughed people and you brought people back, you know, if somebody was replaced, you include both people. One doesn't count as an FTE and counts as a FTE in your reference period, but they're going to be zeroed out in your covered period. But the other person is an FTE in your covered period, but doesn't exist in your reference period. So it ends up being a wash. As I mentioned earlier, the instructions for the loan forgiveness are 11 pages long. It is a very, very detailed calculation, which, to be honest, is going to create a lot of work and is going to be a lot for the lenders to review. Chris?
Yeah, let me go to the next one. So the next one is about when to fill out the forgiveness application. If we choose to take the 24-week covered period, when are we expected to, when will we be required to fill out the forgiveness application with our bank? Under the current scenario, you're supposed to fill out your forgiveness application within, I believe, 30 days of the end of your covered period. We don't have any insight yet into whether that guidance will remain or not, and we don't know. There was a similar question about the election. Can you wait till the end of the 24 weeks to decide if you're going to use the 8-week or the 24-week as your covered period, or do you need to make an election prior to the end of your 8-week period? Those are still pending issues, and we'll have to await the actual guidance from the SBA to answer them.
Okay, thanks, Chris. Would rent for storage facilities with lease agreements be eligible expenses? Yes, that would be leases, as all leases, whether it is real or personal property, are eligible expenses. Chris?
Okay, I'm just looking at the next question, sorry. The next question is the new exemption in the Flexibility Act related to finding qualified replacements for employees who are employed on 215 exempt you completely from the FTE reduction, or does it just provide an exemption for those specific employees? Not clear yet. if you can't find qualified, if your employees have, you have certain classes of employees, say, manufacturing employees and office staff, it might be possible that if you can't find the qualified manufacturing employees, then you can probably claim the exemption for those employees only, instead of eliminating the FTE requirement at all. I would think it would apply on a partial basis. I think it's going to be real important, though, if you can't find qualified replacements, that be very well documented. I don't know what specific guidance they'll issue about that, but that's an area that would be ripe for abuse among companies, and you just need to be sure you have compelling evidence that you tried to find employees to meet your needs.
Thanks, Chris. Okay, here's one, and this is one of these areas where I think there's going to be a lot of questions and issues as people delve into this a little bit more, because I think the guidance is sort of lacking. It's in regards to the safe harbor for FTEs. Do we need to have the FTEs restored as of 12/31/2020, or could it be for only one or more pay periods prior to that? So the way the legislation is written at the moment, and everything that I have read associated with the legislation, and this is law firms' interpretations, discussions we've had internally, is that at the moment, there is only that 12/31 date. They have not given any guidance that says, hey, we have everything restored on October 31st. We're going to count that. We're going to do everything as October 31st, and we're going to file now. We're going to do averages between the disbursement date on October 31st. In fact, there was an article earlier today that was warning people that, it is possible that you are going to have to maintain FTEs and wages for the full 24-week period if you select that 24-week period, or if you're somebody applying for a loan now and automatically gets that 24-week period.
Great. I'm going to take a few questions related to expenses, eligible expenses. The first is, are prepayments of eligible expenses within the covered period other than interest allowed? Generally speaking, no. There is some language in the current forgiveness that you can take incurred expenses. So let's say your utility bill is due 10 days after the end of your covered period, you can prorate the utility bill to account for the portion within your covered period, even though you don't pay it till 10 days later. The requirement around those types of expenses is that you have to pay them by the next due date, but generally speaking, prepayments or accelerated payments are not allowed. The other is related to, can I add into utilities my new monthly charges for disinfecting the office? No, that is not considered a utility. Utilities are electricity, gas, phone, transportation, things of that nature. All right.
Okay, I'll answer this one here. Can you confirm there is no maximum percentage of PPP funds that can be used towards payroll? No, there is no maximum percentage to be used towards payroll. You want to use 100% for your payroll costs? That's absolutely fine. You can use 100% for payroll costs.
If I utilize 100% of my PPP for payroll within a 10-week period, do I have to wait until 24 weeks to officially apply for forgiveness? That's still to be determined. It sounds like that may be the case unless the SBA comes out with guidance that suggests otherwise.
Here's one. Given the extension of the eligibility period from 8 weeks to 24 weeks, are businesses able to apply for an increase in their PPP loan to get further relief from payroll-related costs? The current laws that have been enacted do not allow for increases in PPP loans. Associated with the Flexibility Act of 2020, there was also a side letter done, and that side letter put a hard cutoff date of June 30th for anybody applying for a new PPP loan. So in order to have anything extended, it's going to take Congress to pass something else to allow people to increase their loan or to get anything extended beyond June 30th.
So this question asks if it has been 8 weeks since we received the disbursement, and the bank called yesterday and asked us to declare now if we are seeking an 8-week forgiveness or a 24-week forgiveness. Is this required? We have seen nothing in what has been issued so far that requires you to declare which period you're using. And we have seen instances where banks are taking their own interpretation, and I would just, in that case, or in any case where the bank seems to be requesting something that doesn't seem required by the guidance, is to just politely ask them, can they point to the direction that they're using to require this information, because at this point we haven't seen anything about having to make a declaration.
Yep.
So we've got a lot of questions. We've got about 5 more minutes to answer questions. And so for the ones that we don't get to, and there's a lot of them in the queue, as I said before, you'll find those answers on the VCFO website in a few days. So guys, we have about 5 more minutes and then we'll start to wrap up.
Let's see. So here's one, and again, I'm sort of picking some of these ones that are unknowns. We go with 8-week period that ends on or before June 30th. Do we still need to maintain FTEs through December 31st, or would it still be June 30th? So I am going to say to this one, and Chris is welcome to chime in here too, or Ashford. We don't know the answer to that one at the second. We know that they changed the date to December 31st. We have not seen anything that says if you stick with the 8-week period, you can pick the June 30th date. We are expecting any day now guidance to come out from SBA and the U.S. Treasury that is going to clear up some of these unknown pieces. One of the things that we've noticed through this process is every time they do something to answer questions, they end up generating a lot more questions. So this is one of those things I would highly recommend people to stay attuned to what is going on the Treasury website, the SBA website. You can also go to the VCFO website. We have a landing page for COVID-19, one-stop shop. You can go there, you can find our webinars, our Q&As, and links to all the important websites such as Treasury and the SBA.
So I've seen a couple questions in the chat or the Q&A section about being able to increase the loan if you choose the extended period, and the Act specifically excludes going back and asking for more money if you choose to use a 24-month period. So the money you have is the money you get, and I think if you are applying for a loan now, you're still limited to 2.5 months of your payroll costs, and that the calculation to determine what your eligible amount is, which is 2.5 months of your payroll and eligible non-payroll expenses.
Okay, let's see. Our office lease is coming up for renewal. We're contemplating moving to a large space in the same facility at a higher cost. We'll be able to include the higher lease expense in our forgiveness calculation. No, I do not believe you will be able to. The guidance is very clear that to be a qualified expense, the agreement had to be in place on February 15th of 2020. I've had this question come up before in the case of acquisitions that have been done, when people that missed the date by 2 weeks. At the moment, as long as it stays the way it is, it would not be includable.
Time for one more question.
So this question's about seasonal employers. We haven't seen a lot of those. It says, if you did not apply as a seasonal employer, can you use seasonal alternate 12-week period for FTE calculations? Submitted application when teachers would have been on payroll but funded in second wave. So I don't think there's any definition of a seasonal employer in the original PPP guidance. I think it's an option that seasonal employers have. So the short answer is it's not entirely clear whether or not you have that option or not. But I think as long as you're consistent in the way you apply your periods, you should be able to have that flexibility. I mean, it's probably, you definitely have stronger argument if you are in fact a seasonal employer. And in this case, it sounds like you might be a school. So I think a little more research will be needed and maybe some judgment in working with your bank.
Jennifer and Chris, thank you so much. It's not easy to take these questions and fill them on the fly like you have, and we really appreciate it. As you'll hear, we have a couple of slides with key members of our team from our Houston office and our Dallas office, which jointly pitched in to do this webinar. And as you can see, there's a lot more to come on this Flexibility Act. We're 5 days into it. There's lots of questions about it. We'll definitely be doing more webinars on it in the days and weeks to come. So keep an eye on your email for that. Thank you so much for your participation today. We hope it's been useful to you. We, as Jennifer said, as Chris has said, we expect numerous updates to be posted in the coming days and weeks. And so refer back frequently to the VCFO website or the SBA or Treasury website. Thank you so much, and we'll talk soon.
Thanks.
Goodbye.
Bye, everyone. Thanks.